E-commerce companies face unique challenges. Following the global pandemic and the focus on e-commerce, we're now moving into the next generation of e-commerce companies. Companies that have perhaps survived the pandemic, perhaps thrived during the pandemic, and now are looking to see how they can take their gains from the pandemic and turn it into a sustainable future for their business. When e-commerce companies look to the future, they need to take a moment to first think about the challenges that are directly in front of them. The e-commerce space is dominated by marketplaces, which provide a huge opportunity for online sellers. They're able to sell in a way that wasn't possible even a decade ago. But with those advances come challenges. Payment terms can sometimes be 30 days, 60 days, quite a long time to wait for your cash after your sale. In today's global economy and a focus on just-in-time delivery, it's shocking to say, but supply chain disruption has been a hallmark of the post-global pandemic era. What this means for e-commerce companies is that getting the goods to market takes longer. The cost of getting goods to market is higher. Once the goods are in the market, it takes longer for them to get paid once the good gets sold. These are overcomable challenges, but those challenges need to dictate the approach that e-commerce sellers take. If you're an e-commerce company and you're looking to grow, there are 5 main ways you can get access to capital. The first is VCs. VCs, or venture capitalists, are generally a group of investors who invest in specific markets or specific verticals where they see the opportunity for growth. The advantage for the e-commerce space is that it has continued to grow throughout the COVID pandemic. The challenge for the e-commerce space is that many conventional investors don't fully understand the space. They'll look at working capital, for example, and they'll see e-commerce companies with large amounts of their money tied up in inventory and with long payment terms, and they might mistake those structural challenges of the space for a challenge in that specific company. VCs also want to invest in new, innovative approaches. Maybe that's you. Or maybe you're trying to be a wholesale seller on Amazon and you need to get cash to be able to grow your business. Depending on your situation, the VC approach may or may not work for you. You have to look yourself in the mirror if you're going to pitch a VC, and with a straight face be able to argue that you can hit aggressive growth goals like 70% year-on-year growth. The second means of getting funding is through a bank loan. This is quite common in the e-commerce space. Banks are fairly forgiving in terms of offering loans if you agree to the interest rate that they provide. The challenge is banks, like conventional investors, don't understand the e-commerce space. They'll look at working capital and liquid assets in an e-commerce company and they'll say, you don't have very many, because again, the capital could be tied up in inventory that's not yet arrived. And the sales could be record-breaking for your company, but not in your bank account yet. Banks are not the best way to fund and finance your growth. They offer high interest rates, and generally, they require some form of collateral. If the business doesn't have collateral that can be used, they may ask for the founders of the company to put something on the table, which then puts your personal finances at risk. The third way to get funding is something called factoring. Factoring is essentially where a third party buys some of your existing invoices. So, as an example, perhaps you're a seller on Amazon and you've just sold $50,000 worth of goods in the last month. Right now, you need to wait 30 days, perhaps, to get that money in your bank account. What the factoring company does is essentially say, here is $45,000 today, and in 30 days, when the $50,000 comes in, that goes to us. It's a nice way to harmonize your cash flow, but it's not a sustainable way to fund your growth. Essentially, you're getting your invoices 30 days faster. The challenges with factoring are twofold. One, you have to have all of the invoices go to your factoring provider. So this means that all the money must go directly from your marketplace, Amazon or Shopify, to the factoring provider. There can be some logistical challenges with setting that up. 2, they often lock you in, sometimes up to 24 months. And the challenge here is that you might only need this cash flow plug for 1 month out of 12. Factoring is worth considering, but again, it depends on where your business is and what your goals are. The 4th way to get funding is to sell your company. The challenge here is this is a bit of a chicken or the egg issue. You need to be profitable to sell, but you need the money to invest in the company. Selling your entire company or selling a portion of your company is not dissimilar to getting VC investment. If your plan is to sell your company, the best approach would be to build the company and to put it in the best financial shape possible so you can get top dollar for the company when you go to sell it. Finally, cash advances. The way that cash advances work is a third-party company buys your future sales. You can then pay back that money over a longer period of time. Perhaps they buy $500,000 of sales over the next 10 months, and you pay that back over 2 years, as an example. Cash advances give you the flexibility to get the money now to invest in your business today to grow it for tomorrow. Of the 5 funding options for your company, the question to ask yourself is, what are your goals? Where are you going? If you need money to invest to fill a short-term hole just for a month, that's a different situation than if you want to invest in a new product line, or you want to change your go-to-market approach, or you want to put your business on a growth trajectory. At Yardline, we work with ambitious e-commerce companies who are looking to grow and grow fast. We provide them with capital advances coupled with access to some of the brightest minds in e-commerce today. When you work with Yardline, you not only get funding, but you get tools and a team dedicated to your success. Contact us today to learn how we can work with you to take your business to the next level.